Hello and welcome to Martyn Lucas Investor. My name is Sensei and you're watching the morning forecast show straight from the shed. Thank you everyone for tuning in. I'm very happy to be back. Thank you for bearing with me while I am being kicked out of the home due to my unborn baby. So yes, I have to give up the studio for the shed, but thank you everyone for tuning in. Today is a very important day. It is all to do with live jobs reports. So what are we doing? We are going to be covering jobs data, a few pieces, unemployment data, the non-farm payroll. We've got hourly earnings, quite a bit of high impact data we're going to be covering for you. I'm going to give you all the numbers. We're going to get straight into that. So thank you everyone for tuning in. Let's go straight to the newsletter. Then I'll come to your comments and questions. Then we will be covering the jobs report on this show. We'll put the timer on the screen as well. Let's go to it. So put this over here. There we go. Morning forecast, Friday, 9th of January. If you haven't already got the newsletter, it is pinned in the live chat. I'll actually give it to you in the comment section as well. And you can get the daily news. We carried on doing the newsletter every single day, but because I was moving location, I could not stream. So the newsletter carried on, but now I'm back streaming as well with these events. So thank you everyone for tuning in. Today, jobs data. If you have just tuned in and you have some sympathy for me being in the shed, please do hit that like button, subscribe if you haven't done so already. I'm so happy to be back. So here we go. Get some garden gnomes, says Thomas Monroe. Yeah, we might need to redo the shed's background. So today's stories at a glance. We've got Trump targeting mortgage rates. You might have seen that news come out late last night about the $200 billion intervention. We've got Rio Tinto and Glencore, the two of the biggest miners. One's more focused on trading, that's Glencore. Rio Tinto more focused on projects. They are in talks right now to merge. We have had these talks before earlier last year. A few times these two giants wanted to merge, but now they might be doing it again. This will be the biggest mining company in the world. It will be a $200 billion deal. We've got Soho House deal hits wall. We've got Iran blackouts follow the Rial collapse. That is the collapse in the currency of Iran compared to any other currency, specifically the dollar. Now there is a cut in internet access, or there's reports of a cut in internet access while there is those protests going on. Some call it riots, some call it protests, depending on what side you are on. Republicans join ACA subsidiary extension. We had a bill passed through yesterday where Republicans actually came onto the Democrat side, and that passed regarding Obamacare. We've got the main story today, which is in 51 minutes time, jobs report. This jobs report's hope the shed has heating. I've got an electric heater. We're all good. Jobs report dictates rate path. So yeah, remember last big data Fed report we looked at was the Federal Reserve minutes from the FOMC, not the FOMC report itself, but the minutes that got released later. I think that was last week. We must have covered that. And our conclusion was that it's actually just going to be based off data. If jobs data is weak, rate cuts will come. If inflation is coming down as well, we won't get rate cuts. So essentially, I'll get into that in a second, but we've got jobs report, which is going to be dictating the rate path. That's going to be coming out in 50 minutes. Not only is it unemployment, we've got non-farm payrolls, we've also got hourly earnings as well. December employment data acts as the binary trigger for Federal Reserve interest rate cuts for 2026. We'll have a look at the Federal Reserve watch tool here, where you can essentially see what the market's pricing in. Remember, the Fed, if you look at their dot plot, where each member says where they think the rates will be going or where they will be by the end of this year. If you look at the median, which is obviously sort of the average if you want, or cancelling the outer ones and coming in. That is one rate cut. So the Fed is essentially saying there's going to be one rate cut. If you look at the Federal Reserve Watch tool, which is market participants, this is sort of what the market's pricing in, and you go to December of 9th of December 2026, which will be the last FOMC meeting of the year. What you see behind me is where the market thinks the rates will be. So currently rates are at between 350 and 375, 3.5, 3.75%. And you can see that market is all over the place. However, the biggest bar on this chart, as you can see, is over here at 300 to 325. So that's 3% to 3.25%. That's actually 2 rate cuts. So the market's pricing in 2 rate cuts. The Federal Reserve is pointing towards 1 rate cut. And actually, if you even look further down this list, beyond this bar over here, what you see is 1, 2, 3, 4. There's another 4 bars. So there's actually, if you add up all these percentages, there's about another 40% chance that there's going to be more than 2 rate cuts. There's about a 70% chance there's going to be at least 2 rate cuts. And there's about, obviously you can go through them, but this is the rate cut path the market's pricing into. The market's pricing 2 rate cuts. The Federal Reserve is saying 1 rate cut. Today's data, which is coming out in about 49 minutes time, will be all of these bits you see on the screen. So everything you see with the 49 minutes next to it, all of these is coming out in 49 minutes. But we want to focus on the most important, the most high impact the website suggests is the non-farm payrolls. So that's what would affect the markets the most, especially the FX markets. But I would say the most important, actually, sorry, I'm missing a few bits of data. All of this data is coming out. You see all of this data is coming out in 49 minutes. They also say the average hourly earnings are the most important. So what I would say is the 3 most important bits of data that we should focus on that's coming out in 48 minutes time will be the average hourly earnings year on year, month on month. That will be an important way of looking at inflation. Non-farm payrolls, that's a way of looking at jobs. That's a high impact. And the other thing I would look at is just the simple unemployment rate. This isn't marked as high impact, but I would say it's high impact. It's the unemployment rate. Previously, we got 4.6. That was quite a shock towards the upside. That's behind my head over there. Previously, we got 4.6. The consensus now is 4.5%. What we want to see if you want rate cuts is that to go a bit higher. If you want a soft landing and you don't really mind about short-term gains in the stock market, then you don't really care. You don't want to see it too low and you don't want to see it too high. But essentially, 4.5% is the consensus. If we see something like 4.6, 4.7%, that means the jobs market's looking weak. The Fed will have to intervene and cut rates. When you cut rates, you inject money into the stock market. Okay, so that's the gist of what we're covering. We're going to dive into all of that a bit more later on in today's show, close to the time of the jobs data. If you have just tuned in, if you can do me a quick favor, and all you have to do is hit that like button. If you haven't hit the like button yet, it takes 1 second. I know it's the morning. We have a goal. I think it was 143, 145 likes that Martyn got, and he was making fun of the morning show and saying you guys don't like the morning show. So if you do like the morning show, and we do want to beat Martyn on likes, let's try and get 150 likes on today's show. Thank you very much. Okay, hit that like button and subscribe. Let's go over to the live chat, and then we'll come back to the important stories of today and what data will be good, what will be bad. We do have a poll running right now in the live chat. Leave your prediction for the imminent jobs report. Do you think it's going to be below 40k? That'll be bullish for rate cuts. We're talking about non-farm payrolls over here. Below 40,000, bullish for rate cuts. Less jobs created. Dovish March rate cuts, that's about 40 to 55,000. In line with consensus will be between 55 and 65. Remember, consensus around 60,000. That would mean no rate cuts in January. Above 85,000, that'll be hawkish, risk off. Essentially, we might not even get rate cuts in March. So choose your options, and we'll come back to that poll later on. DJ Haynes says, welcome to Sensei's Shed shares, sowing the seeds for growth so we can harvest some juicy profits throughout the coming seasons. Yes, exactly. We've got all hidden meanings behind the shed. We've got all the tools of the trade. We're sowing the seeds. Thank you, DJ Haynes. Welcome to the new studio in the shed. Live. Let's go back to the live chat. Let's go, says MDL. Potato Family says, Sensei, I'm so excited to see your new shed in action. Make sure to turn off your sprinkler system. We don't have sprinkler systems here in the UK, or most of us don't. We don't really need them. Martyn says, copy and paste, Sensei in the shed, Sensei in the shed. Martyn's having a lot of fun with me being in the shed. James 007 says, Sensei in the shed. It's Antony says, Sensei in the shed. I hope for him he has some kind of heater. I do. Toxic Wolf UK says, Sensei in the shed. Henrik says, good afternoon all. Yolanda says, Sensei in his man shed. The Patrick says, good morning, Martyn and Sensei. I was thinking a commercial for your merchandise would be pretty good for the 3 minutes when your show starts instead of the countdown. Just a suggestion. Thank you, the Patrick Black. I will let Martyn know. Yolanda says, if you missed Sensei, let's hit that like button. Yes, please do. Thank you, Martyn. Sensei in the shed, Sensei in the shed. James 007 says, Sensei lives in a shed till the end. Satoshi Pekamoto, the rooster for a friend. Cash in the attic as we knew is no more. Crypto shed, felt roof. Wooden walls. Thank you. James 007 always has a good song for us. Robert Elliott says, good morning, Sensei. Good morning. We're covering the jobs report. That's in 43 minutes time. We're going to just go to your live chat, go to the live chat now, answer all your questions. Then we've got the full report ready for you. All the numbers that matter, what to look for, what it means, rate cuts in 2026, what's the projected path, what specific numbers would be good for the market, what would be bad for the market, how I'm positioned. We're going to also look at XRP. So I'm going to spend a few minutes going through the live chat, then we'll come back to the analysis. Dale-ish says, praise the shed. Mahir says, morning, Sensei and everyone. Robert Elliott says, with the roosters. Thank you, David Hensley, for the links. Poor man to rich man says, Sensei rooster in the shed, smash the like family. James 007, British Secret Service says, I hope you didn't kick Satoshi Pekamoto out the shed. He was never in the shed. They live in a sort of a, it's not really a shed where the roosters live. Yolanda says, hello, David. Congratulations on your Coca-Cola. Yes, big congratulations to anyone who took the Coca-Cola trade. Martyn was up, what, 10,000, 11,000, 14,000? Something crazy yesterday. Look, there is, to some people, they can't handle the stress. Martyn is experienced. That's why he took the trade. It doesn't mean you have to copy Martyn's trade. It doesn't mean you have to go all in. It just shows that sometimes if you have the dedication, if you know what you're looking for, if you understand the numbers, you can take these, some would say high-risk plays, or you can take these specific plays and you can, because you've got a lot of, what's it called? Not dedication, you've got a lot of conviction in your stock play or your method, and you stick with it, you can win. The reason most people lose is because they might know something's going up, but they get too scared, they sell out too early, they panic sell, they FOMO, they let their emotions get the best of them, and they don't stick to their plan. Martyn stuck to his plan. And that's how you win, by sticking to your plan. Not necessarily the trade itself, but it's more about your emotions. Stick to your plan. And a lot of times people have a good idea, they enter the position, they get scared, they get out, and the stock goes up. So understand exactly what your plan is before you go into the trade. Think 5 steps ahead, and you'll come out on top. So good luck to anyone who's in Coca-Cola. Remember, we don't give financial advice. What's right for us is probably not right for you, but you need to have a plan in place so you can control your emotions. That's the way most people lose. They have the right idea, but they don't control their emotions. Okay, we are about 40 minutes away from the live jobs data. We've got jobs data, inflation data, all coming out in 40 minutes, which will decide the rate path. So stay with us. I'm going to go through the live chat for another 5 minutes, catch up, and then we're going to go straight to the analysis. Good morning, poor man rich to rich man. Hello, poor man to rich man. Mahir says, lovely to have you back, Sensei Mahir. Thank you for tuning in. Zach Zate says, God bless the USA. Good to be back. Thank you, Zach Zate, for being here. James 007 says, good morning, Zach. Roberta says, bring the roosters. I don't want to bring the roosters. David Hensley says, love your new background, Sensei. Thank you very much. Yolanda says, love it. Poor man to rich man says, James ZZ. James 007 says, if the rooster's allowed in the shed, then the shed is better. No, it's not. Trust me, it's not. He's not a very nice rooster. Slim Will UK says, hello, fellow humans. Welcome to the show. Dan Ackerman says, good morning, Sensei. Welcome back. Martyn says, Sensei shed, love it. Ricardo says, good morning, banana heads. Glad to see Sensei's back with the charts. Yes, we're back with the charts. Back with the morning forecast show. Sam Dirk says, love the setup. Thank you very much. Itanzo says, Sensei in the shed. Sensei in the shed. Wow, the shed looks good. Thank you, James. MDL is laughing. Get some garden gnomes. Loving the shed studio. Dan Atkins says, shed some light on today's news. I love that, Dan. Shed some light on today's news. Let me know if you think the shed is a bit echoey. Let me know if you think the shed's a bit echoey. Henrik says, love the shed, Sensei. Thank you very much. Mahir says, shed looks cool. Thank you. Oh, Robert Elliott. Why did this not pop up? This is strange. I've got it on. Robert Elliott with the $5 super chat. Thank you very much. Thank you very much. Yes, we're 38 minutes away from the jobs data. I'm just going to go through the live chat. I don't want to let anyone be left behind. I haven't been streaming for the last, I think, week, to be honest. And it's because I've been moving to the shed. So if you were confused about what everyone's talking about the shed, I've been kicked out the studio because I've got a baby on the way. And that's now turning into nursery. So I'm in the shed. So I had to relocate. The newsletter ran as normal because I didn't need the studio for the newsletter, but the live streams now start again. So that's what everyone's talking about if you're like, what's going on? Sean Ryan says, is it really a shed or a green scale? I can never tell these days. Well, you're going to have to. I'm not going to give away too much. Thomas says, Sensei, show us your real shed. David Hensley says, love the shed, but I still need to hear the rooster. It's Antony says, like if you want that. Sensei reveals the real shed. Sean says, amen. Happy Friday. Anthony Haynes says, hope that shed has heating. We've got electric heater in here. James 007 says, the shed is better than the attic. I love it. Thank you. I'm glad you like the shed. Just trying to figure out why these super chats aren't coming in. Hopefully they come through. Sensei in the shed, a crypto show. Rhino Skin says, hi Sensei, good to have you back. If you haven't hit the like button, we're trying to get to 150 likes because Martyn says no one likes the morning show. So if you want to prove Martyn wrong, please do hit that like button. Lots not yet found too. I get my best investment ideas in the shed. I hope I do too, because now we're going to be kicking off the portfolio challenge. We've got the account funded with 5,000 Great British pounds, and we're trying to reach 300,000. So I hope I get my best ideas in the shed. Where were we? Good to have you back. Thank you very much. Sean Ryan says, why can't people just get along in the US? I live in the upstate New York near near Canada border. So luckily don't deal with city, but I want to move ASAP. Yeah, I wish everyone could just get along. I think we've got a lot more in common than we don't, but we always seem to argue and choose two extremes. Guy Kemp says, now in Florida. Thank you, David Hensley. One of too many people, not to be a party people, but do you really believe that the coming jobs report is even remotely honest? It doesn't matter. Look, sometimes it doesn't matter if it's honest or if it's not honest. It doesn't matter if XRP's got great fundamentals or if it doesn't have great fundamentals. It doesn't matter if the stock market's overvalued or not overvalued. It's all about perception. So let me explain each and every one of those things I just said. It doesn't matter if the jobs report is accurate or not, because the whole market is going to deem it accurate, or the market's going to react based off those numbers we get. Long term, it might be a bit different, just like the debt of the US. The debt of the US is a real big issue. However, we can just keep kicking the can along the road and no one cares about it until it's a real problem. So the jobs data is the same. You might think it's not accurate. You might think it's government controlled or not government controlled, or it's political. It doesn't really matter at the end of the day, because that's the number we're going to get. That's the number the market's going to react to. That's the number companies are going to use. So whether you think it's accurate or not, it doesn't matter. That's what we need to base it off. The other thing I said was it doesn't matter if the stock market's overvalued or not, because sometimes things are irrational. So the stock market in 2022, a lot of people said we're in a bear market, we're going to continue going down, valuations don't make sense. However, we turned into a bull market and everyone got left behind. A year ago, everyone said AI is overvalued. We've rallied 50% since. 2020, people said this V-shaped recovery is going to end because the valuations are too high, and this is the highest we've ever been valued. We continued in the biggest bull market ever. So sometimes rationale doesn't matter. Even if you're at all-time highs, it might not make the sentiment's different, the market participants are different, the amount of money flowing is different than what it maybe should be. So nothing always makes sense. And same with XRP. That's the third point I made. XRP, it doesn't matter if it's the best utility coin or the worst utility coin. If there's a massive army behind it, the XRP army, and there's people thinking it's going to go to $100, $1,000. In fact, that helps. I don't like it because people lose, and of course there's morals behind it, but if everyone thinks it's going to go to $100, $1,000, they're going to continue buying at $10, where I might be selling, and they can be exit liquidity, and maybe they have to learn the lesson and then start again. But even if XRP isn't the best utility coin and the next best thing comes along, or stable coins are much better than XRP, which I don't believe, by the way. I think XRP is quite a good utility coin, but it's got the sentiment behind it as well. So even if XRP didn't have good utility, because it has such a strong community behind it, you can forget about the rationale about it not being a good utility token. You can focus on the sentiment. So all of these things, you have to look at the data because that's what we have in front of us, but also you have to look at how the market perceives it. Do they think it's real? So that's a few examples of when something might not be right, but it doesn't actually matter. You have to look at it with a different lens. Like the shed, says poor man to rich man. Yes, let me put that back on the screen. 32 minutes away from the live jobs data. We're getting jobs data, non-farm payroll, unemployment data, hourly earnings, all high impact stories. I think it's the highest impact data report of 2026 so far. It will deem how many rate cuts we get. We're going to come onto the full analysis, how to get prepared very shortly, and I'll get through the chat. I might focus on members' comments now just so we can get onto that report. Sean Ryan says, so what do you do with stagnant cash? I hear a lot of rumbling about silver crash and have crypto and little metals, so to add there, but need to learn more about stock. Okay, here's another example. You might hear all this rumbling about AI crash and carry trade or silver's crashing. They're all real threats. They're all, why is that just gone weird? It's really strange. Let me go like that. They're all real problems. There is potentially a big AI overvaluation. There are companies just giving each other money, stacking up valuations. There is silver at the highest RSI ever. What did you also reference? Stocks, ETF. Yeah, there is all of that. However, when I went and bought gold and silver in 2022, and I went to the Hatton Garden, I bought physical gold and silver, the person laughed at me. He was like, we're at all-time highs, everyone's selling and you're buying. And he was a gold dealer. And he was like, you're buying at these prices. I said, yeah, I think it's going to go higher. And now we're 4 or 5x from those levels. Just because we're at all-time highs, and back then everyone's saying we're going to crash, everyone said, just because we're at all-time highs and people are calling for crashes is actually makes me more bullish, because if everyone thinks a crash is going to come in, they're probably going to FOMO because they've got money on the side, and that money can still enter the market. So I'm still bullish on silver. Yes, I think there's going to be extreme volatility. Yes, the risk to reward isn't what it used to be 4 months ago. Yes, we've hit our first take profit zone on silver, but I still think it can go to $100. I still think it can go to $125. We look at the technicals. If it stays above $70, stays above $75, consolidates, the next level is $100. Yes, I'm concerned about AI overvaluation. However, I think 2026 is going to be, AI is going to change the world. We haven't even seen a tiny part of it. In 5 years' time, we would look back and go, there was a time before AI and a time after, and that time hasn't come yet. I think 2026, we're going to see a lot of AI development. We're going to see OpenAI possibly IPO. We're going to see SpaceX IPO. We're going to see Anthropic IPO. So I still think there's a lot of upside. And just because everyone's calling for a crash, and maybe a crash, maybe we are at all-time high valuations, maybe we need to revalue the stock market, because AI is something we've never seen before. So yes, you're going to always hear about crashing, but if you look at history, it's always best to be in and maybe buy the dips. If you're always on the sideline fearing a crash, then your money's going to be eaten away with inflation. Remember, nothing I ever say is financial advice, is my thoughts and opinions only. Please do make sure you hit the like button if you have just tuned in, and we are covering the jobs data in 29 minutes time. We're trying to get to 150 likes. Someone let me know how many likes we're on. Let me know in the chat. Are we at 150 yet? David Hensey says, no way, it's honest. Vocal Fossa says, market freaky Friday today, even more when you're banned into the shed. Guy Kemp says, I prefer Sensei to Martyn. I'm not afraid to say so. Everyone's entitled to their opinion. That's fine. You don't need to be afraid. You don't need to be afraid to say so. Why? I don't understand why you would be. Yolanda says 189 watching, and only 61 likes. Let's reach Sensei's goal. Thank you, Yolanda. Please guys, let's all support Sensei by smashing that like button, please. Yes, please do that. It's Antony says, when the money of Sensei's householding is being made in the shed. I love it. David Hensley says, Martyn, remember Sensei needs to hit 145 likes. One of too many people. We need to shed some light on these issues. I love it. Vocal Foster says, so Sensei, you're shedding your light on the market today. Yes. You're shedding some light on the market today. Yes, that's what I'm going to be doing. In 28 minutes time, we're going to be going over live to the jobs report. We're going to be prepared. I'm going to give you all the numbers very shortly. Poor man to rich man says, Mike. Anthony says, XRP didn't work out, and now Sensei lives in a shed. XRP worked out brilliantly. XRP's been it's worked out really well, actually. But that's because we bought at 30 cents, and that's because we weren't moon boys and we didn't think it was going to $100. That's because we had a plan in place. That's because I used my chart analysis skills to trade XRP countless times from $2 to $2.30, $2 to $2.60. Even though I only took 20% profits from my spot bag at $3.40 or $3.30 live on the show, I managed to make more money, add to the spot bag, and take profits within the cycle because of those trades we took. And that's all based on technical analysis, planning, not FOMOing, not panic selling, all of those things. There's going to be a chart analysis course coming to the newsletter very soon as well. So I'll teach you all about that. Karen says, good afternoon, Sensei and everyone. Potato Family says, you need a straw hat. I don't think people used to have straw hats in the UK. Well, I think everyone has straw hats, but I don't think they were very common compared to the US. Mobic says, James Jest. I'm going to go through these comments now very quickly. Zach says, hi. Sean says, congrats on that trade. I need a stock platform. Any advice on the best platform? I don't know where you are. Martyn likes Robinhood. David Hensley says, I think you can get a free share. Martyn can drop that in. Just wait 26 minutes and Martyn will be live as well. And we'll both be live covering this. And you can ask him for his Robinhood code so you can get some free shares. Henrik says, good morning. James 007 says, the shed sounds good. The shed looks excellent. Oh, brilliant. Thank you, James. I'm still here in a bear cave. Hit that like button, says Banana Heads. Poor man to rich man says, smash the like, more than 150 watching. Thank you, poor man to rich man. Thank you for the super chat. Hit the like button. Hit the like button. Banana head says Ricardo. Thank you. Hey, yes. Oh, Yeston's here. Hello, Yeston. The shed vibe is on point. Thank you, Clay Scott. First timer here. What do you think? Oh, first time here, Sam. Welcome to the show. We are the Lucasades. We're honest. We don't take corporate sponsorship. We say it how it is. We're not owned by anyone. We have a great family. We learn from each other, and we're just normal people without trying to use our audience for views and whatever other YouTubers do, and try and get them to leverage trades. They lose money by using their codes, all that sort of stuff. Well, welcome here. I hope you enjoy the show. We're going to get onto the jobs report shortly. What way do you think Trump tariffs will land today? I'm not sure, Sam. Kalandros says, glad you're back. Thank you very much. Sensei, sheds run off XRP technology. Yeah. Vaz says, crypto shed. Vaz, welcome to the show. Valar says, welcome back, Sensei. I hope you stay, as your pre-market analysis is second to none. Thank you very much. Today we're focusing a bit more on the chat because I've been away for a few days, but literally 5 minutes. I'll go over to analysis. I have to skip a few comments now, which aren't members' comments. Yes, now we have 4 broadcasters. We're looking to cut the show with the least likes. Oh, God. Now we have 4 broadcasters. We're looking to cut the show with the least likes, guys. Please hit the like button. Songs for Space says, did anyone else catch that 2-day 168% ZCN crypto pump? Yes, we were in ZCN. I did mention last week that we bought some of those coins because they're down 50%. I don't buy every 5% dip. I buy every 50% dip on some of these tokens, and ZCN was one of them. So congratulations to anyone who was in ZCN. James 007 says, Sensei, you've given me inspiration to finish my man shed in the garden. Oh, I love that, James 007. A shed is always great. A shed's great. You can say what you want about a shed. I love a shed. Vaz says, make sure you have a fridge in the shed, Sensei. Soon you'll be spending more time in there, trust me. Yeah, I've been clearing a few things out. It's quite a big shed. So I'm going to be adding a fridge, maybe a TV, maybe a sofa. We'll see how far we can get away with this. And not before the wife says, are you ever going to come home? Anoita Flowers says, good morning. Martyn Mahar says, careful, don't... No, don't worry. I don't know what you mean there. Bitcoin Craig says, good day, Sensei. I've never watched people to be unemployed before, but I never wanted people to be unemployed before today, but I do. Yeah, it's what happens when you're in the stock market. Sometimes you want things that aren't morally correct. I mean, it's like investing in the S&P 500 companies. A lot of those companies aren't good. That's when I do invest in companies, I do actually look at the companies and think, am I morally doing the right thing? But most people, I mean, you can't really blame people if they just want to make money, and that's fine. But yeah, if you look at the S&P 500, there's plenty of gambling stocks, there's plenty of interest yielding stocks that are probably really hurting families or whatever. You might have morals about tobacco or whatever, but gambling, I don't know. Medication, drugs, that sort of thing. But at the end of the day, that's every person's decision. David Hensley says, lol. James 007 says, Sensei, do you have a kettle in the shed to make cups of tea? No, but I need to get something. Missed the morning show. Thank you very much for $4.99 super chat. Look at this. Kelondros missed the morning show. Oh, that's very nice to hear. Did you guys actually miss the show? Did you guys actually miss the show? Let me know. In 20 minutes time, we've got the live jobs data. I'm going to go through these comments. I think we're nearly at the end. Bitcoins Craig says, have you been kicked out of the house and been put in this shed by your wife? Yes. David Hensley says, nothing too important yet. You're good. Bitcoins Craig says, have you added echo to your mic, or are you actually in a different room now? Obviously not really. No, I am. I'm definitely in a different location. I haven't added an echo to the mic. Can you hear an echo? I was hoping you couldn't. No, I'm outside the house. I've been kicked out of the house. One of too many people, because the US debt is totally out of control. Kalandra says, oh, I just meant I missed his show. Songs for Space says, and Congress, all prison, no questions, all president prison. I don't know what you mean by that. One of too many people says, exactly, Sensei. Watch what the masses are doing and then do the opposite. Yeah, Sometimes that doesn't work out great either. Smash the like button, says James. Yes, are we at 150 likes yet? Guys, just take 1 second to hit the like button. Oh, 118. We can do it. We can do it. Martyn. Sensei's at 131 likes. I really enjoy my morning with Sensei. Thank you, Pavlik. I really appreciate these comments. They mean a lot. Oh, there we go. Martin's given you the link for Robinhood. So if you haven't signed up, this is probably the brokerage Martyn will recommend in the US. Yolanda says 5 more to go. 5 more to go. What time is the jobs data? It's in 20 minutes. Love your smile, says Aliyah Annie. Thank you very much. I appreciate that. Ali Majad says, turn off the stream and go learn how to change diapers. Oh, God. Yolanda says, 1 more. Did it. 30 minutes time. We did it. Did we hit it?
The year is 19...
We'll leave Phoenix for a second. Did we actually hit it? Let me see. We go over here. If I refresh this. Did we hit 150? We did it, 165. Thank you very much. We hit it. If you haven't hit it yet, please do. Let's try and get to 200 so we can really show Martyn how much people love the morning show, and so I don't get kicked off because I've got the least likes. Okay, we're about to get into an analysis. I've said that about 50 times, but I can see there's not many more comments. So 1 more, did it in 30 minutes time. Thank you, Yolanda. The day after women in crypto, men are demoted to the shed. Mike says 4-year badge now. Oh my God, look at the 4-year badge. Look at Mike's 4-year badge. That is incredible. Mike has been a member for 4 years. Congratulations to Mike. Excuse me. Can everyone say congratulations to Mike? He's been the member from day 1. Hi late. He's been a member since I've been a member. Fitty says hi late today. No worries, we're about to get into the data, so you haven't missed it yet. One of too many people says Tyson Foods, 3,200 jobs gone in a town of 11,000. Sad. Oh yeah, that's awful. I don't like to hear stories like that. It's and Tony says sounds like the first step to Sensei's man shed. Vaz is getting rid of what happened there. I can't see. Of course, we missed your show, Sensei. We missed the whole team being together. Thank you, David Hensley. Congratulations, Mike, on your 4-year badge. Calandra says, I work nights and you come on right when I get off, so it works out really well for me. Oh, lovely. Where in the world are you then? Oh, you must be in the US. So what time do you watch this? 7:30 a.m. Mike, William Myers says, good morning, everyone. Bitcoin's Craig says, yeah, 161 likes. Thank you. Good morning, peeps. Any information on Ripple Bank? Check out the Sunday newsletter. I'll see if there's a piece on it. I'll put it in. Every Sunday, we give you a weekly XRP newsletter. You can sign up there. Also, you get the daily newsletter as well. Let's go 1K likes. Get your grand to log in and smash the like button. Thank you, Bitcoin's Craig. Wow, Mike. Congratulations, Mike. Okay. Here we go. So 17 minutes away from the jobs data. Not only are we getting jobs data, this is all happening in 17 minutes time. We're getting average hourly earnings month on month, year on year. That will give us an insight into inflation. We're also getting the unemployment rate. We are expecting the consensus to be at 4.5%, higher than, if it's higher than that, 4.7, 4.8. If there's a shock towards the upside, what you expect if unemployment goes up is obviously that's not great for people, but we're focusing on the market when I'm talking about this, is if unemployment goes up, the Federal Reserve will cut rates so that we don't get a recession, and they need to control the economy. We're also getting non-farm payrolls. The consensus is 60,000, meaning if it's more than 60,000, there's more. I'm just checking this data. Yes, it's in 17 minutes time already. Yeah, so we're also getting non-farm payrolls, which will have an effect on the market as well. The consensus is 60,000. We're going to get into all the data points now. So we're going to look at what it means if it's higher, lower, at consensus. Remember, we're getting all of this at the same time. There's about 9 or 10 different data points. If you can have a look over here. All of this is coming out in 17 minutes time, 16 minutes time now. Average hourly earnings, average weekly hours, building permits, housing starts, labour force participation rate, non-farm payrolls, unemployment rate, U6 unemployment rate, that's part-time workers. We've got building permits, house trades, housing starts. All of this data is going to have an effect on the market. So we're going to be watching a few different charts while this comes out as well. We've got XRP currently down 1% on the 4-hour chart. Let's go over to this watch list over here so we can have a look at all of this. We've got the S&P 500 rising into the data release, XRP falling into the data release. Actually, if we go onto the 15-minute time frame, we'll get a better idea. Bitcoin is now moving up, ready for this jobs data or all of this data release. XRP is trying to find a bottom. Gold is all over the place. It's down slightly today. The S&P 500 is rising into this. NASDAQ is rising into this. Silver is up today 1.14%. So the market is pretty stagnant. Nothing's more than 1% either way. If you look at the whole watch list, you're looking at silver, bonds, FTSE, NASDAQ, S&P, gold, oil, Ethereum, Bitcoin, XRP. Every single one of them are all within 1% up or down. So everything is waiting for this jobs release. It's not only jobs release, it's quite a bit of data. The jobs data is probably the most high impact data being released today. So let's get into it. We're going to be going over to Bloomberg in a second. So let's have that ready.
Oil reserves in the same hemisphere.
That is ready for when that comes out. I'll turn the volume up so everyone can hear. Let's get straight into the morning newsletter. If no one's got the newsletter, every single day you get the top stories, you get prepared for the day, start the new year off right, start reading the news. It's very easy. Even if you read the first minute of the newsletter, or 30 seconds of the newsletter, at least you get all the top stories at a glance. Then you can see the one big thing. You can see the fear and greed straight away, the number that matters, the winners and the losers, the market snapshot. Then you can dive deeper into each of those 5 stories. It's still literally a 5-minute read. You can see all the top stories, Rio Tinto and Glencore potentially merging to create the biggest mining company. We've got Trump with his $200 billion injection, Soho House, looking at the retail market, Iran, how that's going to change. We've got House Republicans as well voting. And then the deep dive you can also get in the premium version, which is all about today's jobs reports. You've got all the charts, what to look out for. So we're going to go through some of the deep dive today, and you also get the chart of the day. So go check out the newsletter. There is a free version. I'm going to put it in the live chat right now. If you don't have it, it takes literally a second to sign up. So there is a link. If you want the premium version, you can try it for a week. This link gives you a 1-week free trial. If you don't want the premium version, then you can just join the free plan and get access to some of the newsletter. Okay, so the rate cut fulcrum, decoding December's jobs report. So December jobs report arriving this morning represents the most consequential labour data since the Federal Reserve explicitly tied further rate cuts to material deterioration in employment in the FOMC minutes. So we covered the. Let me unpack that sentence for you. We covered the FOMC minutes last week. FOMC minutes was actually more important than the FOMC because you actually get to see what the members of the board are thinking. I'm going to really summarize this. We really delved into it. We understood it all. We covered it live. We cover all these events live. So make sure you subscribe. Martyn will be live in 10 minutes. So I'm just I'll replace that when Martyn goes live. Let me just put this over here for now. Martyn, I'll replace that when you go live in 12 minutes. I'll put that on note. For now, I'll leave it here. Okay, so Martyn will be live as well in 12 minutes. I'll continue the show as well, but if you want to watch it with Martyn, you can as well. Join me when Sensei ends. Don't upset Sensei. Yeah, you can join Martyn when I end. You can stay with me for now. But yeah, I'll pin that message in when Martyn goes live. Okay, so yeah, we looked at the FOMC minutes. We looked at the whole report. FOMC minutes is more important than the FOMC actually, because you get the behind the scenes of what was going on in the FOMC, why they were voting whichever way, what they're concerned about, why they only think one rate cut was going to happen. And essentially, if you just want to put it into one sentence, what did the FOMC minutes say? Well, the FOMC minutes literally said they're not going to cut rates until the data shows they have to cut rates. They specifically cited jobs data and inflation data, because obviously that's the most important. They said if jobs data, if unemployment rate goes up or not many jobs are being created, then they'll cut rates. What we're looking at is this chart over here. This is January. Later this month, we're going to have an FOMC report. Right now, the chance of a rate cut in January is 88%, 11% chance of a cut. This will change in 10 minutes time, or it takes a little while for it to refresh. But essentially in 10 minutes time, this will change because the data will come out and the market will start pricing in what the chance of a rate cut is in January. They might push it back to March. Right now, even in March, we're not expecting a rate cut. That might change close to 50-50. In April, we're still not expecting a rate cut. So you can see this data, as the Federal Reserve said, is what might change their mind on rate cuts. There might actually be a situation where we might get a rate hike this year if inflation goes out of control, but that's not the situation we're looking at. So this is the most consequential labor data since the Federal Reserve's minutes. It's the most important one of the year so far. FOMC minutes told us to look at the data. Now we're going to cover the data. This is the fulcrum on which the entire monetary policy trajectory for 2026 pivots. Following a year when the Fed has already cut 75 basis points, the central bank has shifted away from insurance cut towards a data-dependent stance. They're going to look at the data, and that's how they decide. Nothing else. Whether you trust the data, you don't trust the data, it doesn't matter. I don't care if the data is correct or not. Obviously, long term I do, and I don't think it's right. That's not. But it doesn't change my strategy. It may be my long-term strategy, but it doesn't matter. If you think the data is wrong, or if you think the data is right, assume it's right, because that's what the market's going to react on. That's what the Federal Reserve is going to look at, and I'll tell you the exact numbers we're looking for. Current market pricing reflects this uncertainty. The possibility of a January cut this month is nearly ruled out. We're not expecting a cut. While March remains closer to a 50-50% toss-up, this will decide that toss-up. Today's data is expected to resolve this ambiguity, either locking in March easing cycle or pushing expectations out to June. This could show us, are we going to get a rate cut this month or next month? There's not one next month. Are we going to get a rate cut in January or March? Or actually, are we looking in June? This is the decider on how many rate cuts we essentially get this year. This will set the tone. The core narrative is no longer about fighting inflation, but about whether the labor market is cooling gradually or beginning to collapse, a distinction that will determine the dollar's strength and equity valuations for the first half of the year. So we're not too worried about inflation. We know tariffs had an effect on inflation, but that's probably going to be transitory, and we're getting close to 2%. However, jobs data is what we're looking at, and today is a jobs data release, or mainly a jobs data release. So what the Federal Reserve are looking at, is it gradually going up? Is it under control? Is it a soft landing? Is it a no landing? Or actually, are we going to get concerning numbers today, which means that they have to act and start cutting rates quicker than expected? The wage push conflict. So we're going to get average hourly earnings data as well. So we're going to be looking over here. There's in 8 minutes time, we get all of this data. The three main ones I'm looking at is average hourly earnings, unemployment rate, and non-farm payrolls. Those are the three main ones I'm looking at, all clearly cited in the newsletter. Go and check out the newsletter. If you haven't hit the like button yet, it takes 1 second. Please do hit that like button. If you haven't subscribed yet, please do subscribe. Before analyzing the headline hiring numbers of non-farm payrolls, sophisticated market participants are also focusing on average hourly earnings. This metric measures the average amount workers earn per hour and serves as a vital barometer for the wage push inflation. This specific type of inflation occurs when rising wages force employers to hike prices to maintain profit margins, creating a cycle that high interest rates struggle to break. The Fed fears a scenario where job collapses but wages stay elevated. This would force them to hold rates higher for longer, effectively suffocating a weakening economy to prevent a second wave of inflation. So let me boil it down for you into this nice and easy chart. Average hourly earnings. The consensus is 0.3% month on month. The consensus is 3.6% year on year. That's what the market's priced in. If it's in line with that, we look at the next data point. If it's not, and it's one of these two, the green or the red to an extreme extent, then this will move the market. So if it's in line, wage growth is sticky, it's stable, Fed stays cautious, data dependent, no major shift in cut pricing, focus returns to payrolls and unemployment. So if it's in consensus, we move on to the next data. If it's below consensus, and to more of an extent, maybe below 0.1% month on month, year on year, below 3.4%. That confirms calling wage inflation, strongly bullish for rate cuts. March job odds jump, June effectively locked, USD weakens, yields go down, equities rally. So if you're looking for the market to go up today, you're looking at the average hourly earnings and you're hoping it's going to be down less than 0.1% month on month, less than 3.4% year on year. The opposite is there. This is all in the newsletter. I'm not going to be able to go through it all because it's the deep dive. It's reserved for the premium members, but I'll give you a good idea of what we're looking for. So if you want all of this data, we do these cheat sheets every single time for all these events, especially for the big ones. FOMC, you get special ones, carry trade events, Japan, interest rate decision, you get a proper 2-day research newsletter specifically on it. Even on smaller data releases like today, you get all of the things you need to know. So go check out the newsletter. There is a 1-week free trial. If you haven't hit the like button, please do. And if you haven't subscribed, please do also subscribe. We do have a poll running in the chat if you haven't participated. We're 4 minutes away now. So this is the average hourly earnings. We'll be looking at that. If you're bullish on the markets, you want it to be lower than consensus. You want it to be a fair amount lower than consensus. If you're shorting the market, maybe you want it to be above consensus. Essentially, again, it's not as black as white as you can short it as soon as it comes out, because we're getting 9 data releases at the same time. Some may affect the markets more. So again, I never give financial advice. I give my thoughts and opinions. We've been spot on with all of these, but you have to understand the data. You have to read the whole newsletter. Now we're looking at the payroll thresholds, line between soft landing and recession. We're getting payroll data as well. So the consensus is 60,000. So the range, the realistic range we're looking at is between 55,000 and 75,000. This is another high impact data release in 3 minutes time. The payroll threshold. This is the non-farm payrolls. If you want the market to go up, you're looking for not many jobs created because the unemployment rate goes up. The Fed will have to cut rates. So you're looking at the dovish shock. If it's below 30,000, maybe 20,000, 15,000, 25,000, that will signal a sharp labor market deterioration. March rate cut odds jump above 80%. The rate cut expectation of January will become even higher, even though it's still going to probably be unlikely. Initial equity relief. We'll get equities go up, stocks go up. Volatility rises despite lower yields. If it's at consensus, if it's in the grey soft landing zone, you look at the next data point because that's not going to move the market. If it's above 95,000, what we're looking at is the Fed probably won't cut rates. The jobs market's very resilient. Inflation is under control. And then you might see equities and crypto go down. And then finally, we're going to get the unemployment data. So, I forgot to put it in. Anyway, it's all in the text. Anyway, while the headline unemployment rate is expected to drop slightly to 4.5% from 4.6%, institutions are looking deeper into the direction of travel rather than the static number. So if you look at, this is where we're going to get the data. Initially, Bloomberg's always 30 seconds behind, but I have got Bloomberg at 4x speed. I recommend everyone does this now if you're watching live and you want to get it the most live up to date. If you're looking at me on YouTube, if you go to your settings cogs, and if you're on the settings cogs, you go playback speed and you go 2x or 4x, Let that play really fast. You'll become 3 seconds behind me. I'm 1 second behind Bloomberg. You're 1 second behind me. So you'll get the jobs data as it comes out. But even so, the economic calendar here will show us the data first. That's where we're going to be looking. So over here, we see unemployment rate. The consensus is 4.5%. Last month was a shock of 4.6%. If it's higher at 4.6, 4.7, it shows we haven't peaked and unemployment could be an issue where the Fed needs to cut rates. If it's at 4.3%, 4.4%, the Fed won't need to actually cut rates anymore because inflation's under control, and then the market might crash based off that. So, here's the unemployment rate. I did leave it in the newsletter. 4.3% or lower, that's below consensus. Equities will soften, labour market's too strong. 4.6% or higher, that's when the equities will rally. It's a clear labour market degradation. The watch list is there as well, all in the newsletter. We are now moments away. Thank you everyone for tuning in. If everyone can make sure you hit that like button, make sure you are subscribed. Go check out the newsletter. I'll give you the link now. Good luck to everyone. Let's go straight into the breaking news.
September 5th.
Oh, that's pretty.
It's been a while.
Yeah, well, it's the reason why people are talking about clean data. Do we get it this time?
Crazy.
It
We were
is.
doing this on like
5th.
random Wednesdays,
Crazy.
weren't we?
Yeah.
Futures look like this. Your scores set up as follows. We're positive by 0.2% on the S&P 500. Likewise on the Nasdaq. Here's a quick picture of the bond market as we anticipate this jobs number. The estimate is 70,000. With the jobs number is Mike McKee. Good morning, Mike.
Good morning, John, and happy December 9th. 50,000 is the change in non-farm payrolls with a net revision to October and November of a negative 76,000. So over the 3 months, we're down by 26,000. Change in private payrolls, 37,000. Manufacturing payrolls were down 8,000. The private payrolls is only half of what was forecast. So this is a bit of a rebound in the government sector, it seems. The unemployment.
Okay, let me give you the quick breakdown while we can do it faster than them. So the non-farm payroll was expected at 60,000. We just got 50,000, so less jobs created. Nothing extreme, but that's good for the market. Average hourly earnings was a little bit higher. That's not what we wanted to see. And then the unemployment rate was 4.5%. A consensus, we got 4.4%. So I wouldn't say this data today represents, again, we're going to go into a deeper dive with Bloomberg right now, but I don't think this data is brilliant for rate cuts. I don't think we'll get a rate cut in January. I don't think we'll get one in February or March. Let's go into the analysis. Stay with me and I'll give you more analysis in a second.
Out of that, but a 4.4% unemployment rate on the face of it looks like he's not going to get any kind of January rate cut from the Fed.
Mike McKee, thank you, sir. We'll come back to you in just a moment. So you all remember the routine. The first move is not always the right move. But where's the emphasis this morning? On headline payroll, softer than expected, some big downward revisions, or on the unemployment rate? Coming into this, the view on Wall Street was unemployment at 4.647 keeps the door unlocked nicely for a rate cut at the end of this month. 4.4, does that change the conversation for the FOMC? Yields higher by 3 basis points at the front end of the curve.
No, I wouldn't say this is good for equities. No, I don't think this is good for equities.
The 10-year bond yield at the upper end of a very tight range for the year so far, 4.19. And in the equity market, I have to say in the stock market right now, pretty muted price action off the back of some of this, up by 0.2%, Lisa, on the S&P 500.
Right now, at least the initial message from the 2-year yield is that this takes a little bit of emphasis away from the Fed cutting rates at the end of this month. The idea that you got a 4.4% unemployment rate after getting a 4.56% unemployment rate at the previous reading, that was also revised lower to 4.5%. So you are getting a revision lower. You will get some people who will come out and say it's all a noise. How can we really understand any of this? And the headline number was weaker. Nonetheless, on the margins, this doesn't indicate a further deterioration that would really embolden some of the doves to really go aggressively at the beginning of the year.
And Mike McKee, you're still standing closely by. Where would you put the emphasis this morning, looking across this report?
Well, we're going to emphasize the unemployment rate, and I'm still working my way through this, but the Labor Department does say that it adjusted the seasonal adjustment factors that are used in this report for the year, and that may have had an impact on why we see the unemployment rate drop 0.2%. We've still got to see what the overall number is and what the rounding number is, and then we'll take a quick look. I'll take a quick look at what the biggest changes in jobs are. But right now, to say 64 or to say 50,000, that is slower than anticipated, but the unemployment rate falls more than anticipated, and what you end up with is that low higher economy we've been talking about for months.
No real change, as you were. Mike McKee, thank you. We'll come back to you later. As you were for market pricing and Fed cuts this year as well, about 50 basis points, and as you were for Anne-Marie's.
Yeah, this wasn't, sometimes this data is really extreme and we can make some great trades. I'm not making a trade based off this. In fact, what I'm thinking now is my initial thoughts still stand. If you look at the data released, let me give you my thoughts in a second. If you haven't got the newsletter yet, because all the information was in there and you can learn a lot more, you can get the newsletter for a 1 week free trial. There's a free plan, there's a yearly plan, there's a monthly plan. I'll just tell you about it for a second and I'll give you the analysis. So every single day I spend hours a day putting together the daily newsletter. Today I had everything about the jobs data. You saw it had every single scenario, what to look out for, what I'm looking at. There's a chart of the day, there's the 5 news stories of the day, there's the one big thing, there's a number that matters, there's the brief, everything you ever need in a financial newsletter. You don't want to see how many newsletters, how many places I'm subscribed to and how much I'm paying a month for these places, just to get you the best news. You only need 5 news stories and I'll give you all of them every single day. Sundays we give the XRP weekly newsletter. We are starting, we're going to be giving you the training course. Everything I've learnt about technical analysis, you're going to be getting in the newsletter. We're going to be doing a portfolio challenge. It's already basically kicked off. The first newsletter on that will be coming out, I think, this weekend. So that's all about, I'm trying to turn 5,000 to 300,000. You get the one-on-one DM access. You get the financial planning tools. You get the budget planner, debt planner coming this month. The Portfolio Insights app coming in 2026, but you get all the newsletters written by experts, weekly access, instant actionable guides. You get that all in the premium tier. Go and check it out. There is a 1 week free trial. At least try it for a week. There's also a free plan. So if you don't have the budget for it right now, go and check out the free plan. You still get lots of great value. The link is in the live chat right now. There is a monthly plan as well. Just go and see if you want to support the newsletter and get all that great information. So the data got released. How is the market reacting? Then I'll give you my thoughts. Bitcoin was very much had quite a reaction towards the upside and the downside. Now it's trying to choose a decision, a direction. The direction seems to potentially be towards the upside. XRP is the same. It's trying to choose a direction. It's slightly more green than red after that data came out. The S&P 500 likes it right now. It is pumping. NASDAQ is flat. The FTSE is down. Bonds are all over the place, and silver is continuing its up. So the market has taken this slightly, tiny bit well. Are we going to pump today? Who knows? Let me tell you about the data which we got released today. So what was that data? That data was, we got all of this, but the main ones we're focusing on was non-farm payrolls. This was probably maybe the biggest. 60,000 was consensus. We got 50,000. Remember, the lower, the worse it is for the market. We got 50,000. The jobs market looks strong. Then we got unemployment rate. Consensus was 4.5%. Previously, it was 4.6%. We got lower, 4.4%. 4.4% is not too far away from 4.5%. 50,000 is not too far away from 60,000, but it's edging on the side of not very good for equities or crypto or high risk, because the unemployment rate is going down. We are looking at, it's not awful because, in fact, sorry, the non-farm payrolls, we've got 50,000. We're expecting 60,000. Sorry, so that means exactly that. Again, it doesn't really matter because it's in the range of at consensus, but that's slightly good. The unemployment rate is slightly bad, and the average hourly earnings, which is the other thing we're looking at, was slightly bad because that's higher than expected on the year on year. So essentially, none of the data was out of whack. Nothing was severely to the downside. Nothing was severely towards the upside. I think those two cancel each other out. The wages were slightly bad. So maybe slightly more bearish than bullish on this data. But that's just based on the data. Remember what we were saying earlier in the show. It's not all based off data. You have to think about how the market thinks. So before coming into this release, this data release, a lot of hedge funds, market participants would have been hedging. They would have been out the market waiting for the data. So in case the data was really bad, they could buy the dip. Now that they know the data is not bad, they'll be buying at these prices. So that's why you're getting that little rise in the market right now. But essentially, this is quite rare. The data didn't give us a direction. So I would look at the data, I would analyze the data, I would read the newsletter so you understand what that was all about. But I wouldn't say there's a definitive trade based off that data. That data was essentially very much in the range of consensus, nothing out of whack. Slightly, tiny bit more bearish than bullish on the data front, but remember the market's slightly going up now because people were out the market waiting for the data release in case it was really bad. It wasn't really bad. Now people are back in the market. So I wouldn't expect to see too much change in the market today. Maybe we continue with the 2026 rally based off AI and other factors, nothing really based off this data. Remember, we are going to be keeping a sharp eye on every single data release. Why are we keeping an eye on every single data release? You might say it's really boring, nothing happened. Well, sometimes 50% of the time we get out of whack data, and that will tell us a lot about rate cuts. The Federal Reserve minutes literally said we are looking at any data coming out because we will not cut rates until the data tells us to cut rates. Today's data didn't give any reason to cut rates, not a single reason to cut rates. So we need to look at the next data release. I don't know when the next one is. We'll cover it live on the show, but I won't expect these probabilities to change. No rate cut in January, no rate cut in March. Maybe no rate cut in April either if the data stays like this. We're going to be continuing to watch every single data report. That's why it's so important to watch it, because the Federal Reserve literally said, watch the data. We're watching the data. We're going to be ahead of it. But today's data wasn't, everything was around the consensus. And if it's around consensus, the market's already priced it in. We might get a slight rally because people were hedging against it. Now they can come back into the market. Thank you everyone for tuning in. Martyn's going to have further analysis. Martyn has made a 14,000 a day yesterday, so he's will tell you more about that in his show. Let me just have a quick look at the live chat. I do recommend that now that the data release is over and you have a bit of time, go and sign up for the newsletter. It literally takes 1 minute. There is the link. Let me change this. I hope you enjoyed today's show. I'm so glad to be back. Let me know if you are happy I am back. I'll be back next week. Sunday, you have the XRP Weekly newsletter training course coming this month. I don't know if it's going to be by the end of the week, but it's going to be this month. Portfolio challenge is starting this week. And you've also got the budget planner.
This is a test super chat message.
Oh, a test super chat's coming through. This is very good. It's not very good. Someone said it's very good. It's not very good. The Supreme Court decision later today on tariffs that will make the markets move one way or another. Yes, we'll be covering that live on the show, either me or Martyn. So stay tuned. If they rule against tariff decision, we will get downside for sure. But who can predict how they will rule? I'm watching only Archer now. What did the report say? I've just gone through it.
Kevin tipped $84 through Super.
Surfer Air Mobility looks good alongside Archer. I will be looking at the eVTOL industry for the portfolio challenge. We don't need rate cuts to pump. Yeah, we don't need rate cuts to pump. That's for sure. That's why I said 2026 is still going to be a good year. If we get reasons to get rate hikes or anything like that, then that might put an end to it. But AI is still going to be strong. We've got big IPOs this year. Crypto can turn a wave and actually get $10 XRP potentially by the end of the year. Definitely not last year, but now this year maybe. But when I say definitely not last year, I mean in the last 3 months where we said that we're not going to get it anymore and people were calling for $100 XRP. Definitely not then. Okay. Oh, what happened there? XRP Weekly, let's go. Thanks, Sensei. Rally continues. Thank you, everyone, for tuning in. I'm in the shed. I've been kicked out. Martyn's live right now. Stay where you are, and you'll be going directly to Martyn. The link is in the live chat. Let me just end that poll. What was the result of that poll? The result of that poll was below 40K. What did we get? We got 50,000. So we got dovish March rate cuts. Yeah, it's slightly dovish. Slightly dovish data we released today, nothing too major. It was pretty much in line with consensus. Maybe slightly dovish on the jobs front, slightly bearish, slightly hawkish on the average hourly earnings, and slightly hawkish on the unemployment rate. Nothing there. Now we look at the next thing. Thank you everyone for tuning in. Martyn's live right now. Until next time, take care of yourselves and